Well, while the historic tax reform measure plans to benefit working families and boost job growth, big loans for big homes, jumbo mortgages they're called, could be hurt under the new tax deal. Now, this is as some businesses are finding they're getting the short end of the stick, including two major European-based corporations, Shell and Barclays, they are two businesses that are saying that they're going to have a huge fourth quarter hit. But the question is, do companies have a case against the Republicans' tax reform plan? Should investors be concerned about any of this? Here to weigh in, Liberty Tax Director of Tax Compliance, Brian Ashcraft. Brian, good to see you.
Hey, thanks so much for having me. Glad to be here.
Let me start with that latter question, because, when you have Shell and Barclays coming out and saying that they're going to have, multi-billion-dollar payments due now because of U.S. tax reform, should an investor be concerned? Should we be worried that global growth is actually going to slow, that companies overseas are going to take a hit because of what we're doing in this country?
Well, as with many things, we're going to have to take a wait-and-see approach to how the implications are going to play out and what's going to happen and take place with businesses. As this law just went into effect, the ramifications of it are going to trickle out, and we'll kind of see some of the maneuvers that companies make and corporations make. Some are already choosing to give back to their employees and make investments back in employees. Others are making headway with how they're going to handle the new corporate tax rate that's going to be dropping, as you can see there, from 35% to 21%. So there will be some cash flow. So it could be good news or it could be bad news for investors, depending on how it plays out.
Yeah, and these companies did go on to say, look, maybe in the longer term, this will be good for us with our U.S. operations right now. Not a good thing, and that's a hit for the earnings, but we'll have to see how that plays out when we get the numbers. Let's talk about some things that people can do, because obviously everyone is trying to figure out what this means for them. Accountants are trying to figure out what this means for their clients, and it's a lot to go through. But you say that there are some things that we should really be looking at, including their earned income tax credit that goes up to 631. 6,000 plus. I'm sorry, 6,318. Can't talk because I'm thinking about all the taxes I'm going to owe. But you said that that's one of the things that we should be looking at now. Things like storm damage, things like if you're an Uber driver, having children, student loans. Let's talk about some of these things and what people can do for these last minute moves that they want to make.
Yeah, there's certainly some things that, as every year we get to this end of the year time period and people try to figure out how to make provisions for their 2017 tax bill. And so a lot of the things that you can do, you've been able to do in the past. One of the things the IRS estimates that 20% of the population that's eligible for the earned income tax credit overlooks that deduction, and it's actually a refundable credit. So it puts a lot of money in low to middle income earners' pockets each year. There's also things like miscellaneous deductions. If you've gotten your side hustle on as an Uber driver, for instance, the mints that you provide or water, if you go over the top in that service, those are deductible. One of the things especially to pay attention to this year is the miscellaneous deductions with your job, because those are scheduled to go away under the new tax provision.
Right.
So you'll want to make sure you include all of those this year.
So we have until April, but I think it's good advice to kind of go through those things now. And again, we've talked about on the Business Network charitable giving. If you want to do some charitable giving, now's the time before the end of the year. I want to ask you about what this bill could do to charities. There was a really interesting LA Times op-ed about the tax reform bill, and it basically said that, quote, charities will be devastated. Charitable giving will be devastated because of the GOP tax reform bill, because those that are wealthier aren't going to have the incentive to give because they won't get the deductions. Do you agree with that?
Well, so that's an interesting conversation. Again, we'll have to wait to see how that plays out. And I think many of the concerns are from the fact the itemized deductions versus the standard deduction. Under the new tax reform, the itemized deduction will be rising, and the the standard deduction will be rising and the itemized deductions will be limited. But one of the things to keep in mind is only 30% of taxpayers itemized their deductions last year. So 70% of the taxpayers already took the standard deduction last year. And we've seen estimates from 6 to 15% that will itemize this year. So we're talking about 15% of the population, maybe up to 21% of those givers. So that's the impact that we're looking at.
Real quick before I let you go, I did want to ask you about jumbo mortgages. Do you think that business is going to be hurt under this?
Well, so the interesting piece, the current law, you can deduct your mortgage interest up to $1 million. and the new tax provision has it at $750,000. And so all the old mortgages will be grandfathered in, and any new loan actually after, I believe it's December 15th, over $750,000 will be limited to that new deduction of $750,000.
All right. Yeah.
So
no. That's a lot of banks have been
have
been chasing those buyers, and that's going to hurt on the banking side, the business side of it. Brian Ashcraft. Brian, thank you very much. A lot to go through.